and we are kind of in the beginning of the festive season. So let's hope some of that mood continues through the end of the week. But turning the focus to Capri Global, because rising gold prices are driving stronger demand for gold loans. We're joined now by Rajesh Sharma, Managing Director of Capri Global Capital, to discuss the outlook. But before we get to our conversation with you, Mr. Sharma, which we're looking forward to, Sharad is joining in to set that chat up.
Well, for the last 3 days or so, the stock has been going up almost 13 to 15% in the trade. And remember, the stock is beneficiary of rising gold prices, the gold loan demand. That's expected to be an important driver. Stable yields is also supporting margin expansion outlook for this counter. And Street is also focusing on the rapid branch expansions. From the con call itself, they have targeted two important numbers, 28 to 30% AUM growth they are targeting, and the co-lending business that contributes roughly 20% of this AUM, and they want to maintain that market share of 20 to 22 odd percent. South India expansion is also something which Capri Global is looking out for. But as of now, the Street is quite bullish on the rising gold prices and the effects which are happening for the gold financing companies, CSB Bank, and now even Capri Global Capital.
Okay, let me go across to Rajesh Sharma, Managing Director of Capri Global Capital. Mr. Sharma, very good morning to you. And you know, one of the reasons that we wanted to speak to you is just to understand that as we see gold prices internationally back on that uptrend, what does it mean for you? What does it mean for your company? What is the kind of impact that you're seeing?
Thank you. So I think increasing gold price have an impact that borrower's ability to draw higher amount of the loan becomes possible, which makes your growth potential go higher than in a steady state of the gold loan prices. So the gold loan going prices have also impact on the positivity of the NPAs, because your gold loan prices goes up, your LTV comes within the range, and that also positively affect your asset quality in the gold loan. So growth and asset quality both it impact positively.
What is your gold loan AUM already look like, and what are you projecting it? I know in your con calls, your total AUM you looked at with a growth of 28 to 30%, but just let's hive off the gold portfolio within it.
So gold last year we grew about 111%. This year we are aiming that gold loan profit, the gold loan portfolio should increase at least about 40%.
Okay. And what is really going to be the driver there? Are you now going to back this up with more branches, more outreach? How are you doubling down on this?
So this year we have planned to open another 400 branches. Majority will be gold loan branches in that. And we hope to complete this expansion by end of December. So the momentum in the gold loan overall demand and growth is very encouraging. The way we have grown our portfolio, we started this business in 2022, and in less than 4 years we built a book of almost 20,000 crore. So this year target is to take this book to 28,000 crore, and for that, to support that growth will be coming from the data science driven some specific schemes where we improve the productivity of our people, plus adding the another 400 branches by December.
Mr. Sharma, good morning. This is Alex here. Just a question on the gold loan, and obviously we're stressing on this because it's now accounting for 47% of the book, right? I'm trying to understand the implication of the competition in the space, because it's like everybody wants to jump into the same pool. The pool size, of course, is also growing a little bit, but not necessarily at the pace where there are new additions and new competition. So is that having a bearing on the pricing of loans?
So I think looking at the gold loan prices are more than tripled in last 4 years, and total household reserve is expected to be in the range of $5 trillion, which is a huge reserve. Only marginal about 12% gold is monetized, so that leaves a huge scope for loan against the monetization of the gold. Having said that, despite the new people are coming, everybody is growing. It means that informal segment market share is shifting to the formal segment, to the banks and NBFCs. So while competition will impact some kind of a yield, but I think it will not impact the overall growth.
I'm just trying to understand quantums here. If you can put that into perspective for me, because you had interest rates more or less stable for a couple of quarters. So if you look at Q1 versus Q4, what is the implication, and maybe even Q2 as we're speaking right now, what are the kind of yields that you're getting on your gold loan portfolio on an average?
So our realized yield of the gold loan portfolio is in the range about 18.6%.
Okay.
And throughout the year, we hope to maintain in the range about 18 to 18 and a half. So we don't see much reduction there because we are focusing on the small ticket size gold loan rather than going for the big ticket size gold loan where the competition, the lower rates loans are happening, teaser loans are happening. We are not going much into the launching and competing in the teaser loan competition. We are focusing on the smaller ticket size business gold loan. So I think we should be able to hold our rates, and we should be able to grow our book in the range about 40%, as we said.
Understood. Okay. And just a quick follow-up to that, what is the kind of ticket size that you're talking about? One, two, in terms of the raw material for you, which is in the fixed income space and bonds essentially, right? So, or rather, the deposits that you would get, right? The yields have gone up in the system, and so therefore, are you seeing a pressure on the margins on account of that?
So interest cost, because this gold loan portfolio is still is a short-term maturity, by mixing some short-term instrument, borrowing through the commercial paper route and other route, I think we should be able to maintain our cost of fund in the same um, uh, pricing where we were getting from the banks in the past. So we don't see much pressure there. And pressure will come on the yield of the gold loan side from the competition. I don't think there will be pressure on the cost of fund side.
Okay. Okay. Mr. Sharma, just one point from you. One question that I have with you is on the macro per se. If indeed inflationary pressures are evident around the world and in India, and therefore the Reserve Bank is, let's say, takes a hike or a series of hikes, in part due to the local inflation challenges if they surface, and in part due to global rate action if that were to happen. What does it mean for the operational metrics for all NBFCs? Do they come under a bit of a cloud? Cost of funding, etc., all goes up as well. Could we be looking at NIM compression for in the next 12 to 18 months?
So in case the cost of fund goes up, so far liquidity is available. I think cost of fund can still be passed on to the customer a bit. Affordable housing and other segment growth maybe slow down a bit, but gold loan it will not slow down because gold loan customer for half it 1% rate still is not that sensitive for a smaller ticket size for a smaller tenure. So I think affordable housing loan will the cost going up. We'll see some slowdown happening, but barring that, if the liquidity is available to NBFCs, then I don't think as a sector there's any challenges as such.
Okay, okay, fine. So, Mr. Sharma, you seem confident that you'll be able to pass it on, but it'll be interesting to see how it shapes up. The other part is there was a fund manager from MDC of a mutual fund house who was with us day before yesterday, and he was saying that there is some stress starting to be visible on the balance sheets of consumers who are borrowing to consume. So consumption debt has moved up, and that may cool off loans as well as consumption post the festive season. Are you seeing that or not quite in the system at large?
At the moment, we are not seeing that.
Not
even
seeing
in
that,
the
okay.
month of, not seeing that. Maybe it is possible that in consumer loan and unsecured loan, there could be that possibility. As far as the Capri is concerned, we are doing MSME, affordable housing, gold loan, all are secured product. So far we are not seen in that segment.
Mr. Sharma, just wanted to understand, and we've spent a lot of time on gold loans. The outlook is also positive, basis what gold prices are doing. Now, recently, when we had seen a dip in gold prices, what is the kind of impact it had on some of your accounts? Did some of them reach stage 2? How do you expect to manage the situation if there is another dip in gold prices?
So I think there are two aspects of it. One is that loan to value. So the moment loan to value goes beyond a particular level, the branches start collection calling. So they will, for example, somebody have taken a 1 lakh rupees of loan and prices have fallen 4%, then either we'll collect from the customer 4,000 rupees is part of loan agreement. They have to maintain all the time loan to value. Or in case he's not able to give the money, he has to give additional pledge of the gold. And failing which, either of the situation, we give them the notice that in case if they don't do it, we have a right to auction the gold. And the moment gold LTV goes beyond 85%, we initiate the auction process. And some point of time, we auction the gold to recover money. So I think it doesn't have impact. Is such an asset quality so far. Your weight, your purity check, everything is in place.
My question is, the last time that you had a dip, did you have some of these issues coming up? Was there a certain quantum of accounts where you had to follow this process?
Yeah, so that happens every day. Some of the account reaches the LTV norm because either the gold loan price has gone up or they have not paid the interest dues. In both the situation, the loan to value will breach, and we do the collection calling. So last time it happened. So we made a collection call, and we have not seen the spike in the because we are able to collect. But this is a routine practice. It is not only it aggravate when the gold loan prices fall, but otherwise also when the customer do not pay their timely interest. Again, that also have a same bearing that their loan to value breaches, and we have to do the collection calling and collect the money from the ground through the branches.
If it is regular, Mr. Sharma, then is it true that your loan to value is relatively higher than your peers? Because some of your larger peers have a loan to value of just about 60 or less than 60. So if you're saying that it crosses the threshold of 85, then it would be closer to that threshold, right?
So our loan to value in the range of currently is about in the range of about 72%. And I think now income generating loan, Reserve Bank have allowed that you can, based on the income, you can give them the higher loan to value. Some of the cases we go up to 80%, but based on their past track record and the income generating ability through our proper assessment. But rest of the consumption loan, we follow the same. We don't give more than 75 on disbursement basis. That also impact, having said that the gold loan prices fall, the portfolio level, further LTV can fluctuate either way.
Okay. Mr. Sharma, since we've asked you so much about gold, I want to get a sense of what's happening with your MSME book. And are you seeing any signs of distress or asset quality at all, even at the margins on your MSME book, considering this whole Middle East crisis, high input prices, inflationary commodity prices that we've been seeing?
So I think I'll compare this situation to the COVID when the businesses were completely shut and there was no movement was happening versus this time some of the cost of business have gone up. Not that businesses entire sales have become unviable and the business is not in operational. So I think some bit of compression of margin to those businesses will happen. Some cash flow crunch may happen. So far, we have not seen that in MSME, whether we see the check bouncing ratio, asset quality, or either demand. We have not seen. I think impact these things will percolate. Some take longer time. We have to keep watching. And some of the sector where it has a direct bearing and more impact, and we are watching it carefully through our policy intervention and other places. I think we have to watch one more quarter to see what impact it really causes.
Okay. Thank you so much, Mr. Sharma, for speaking with us today and outlining in detail the outlook for your company. That's the Managing Director of Capri Global Capital. We truly appreciate your time with us today. Let's talk about 2% down off the lows of the day, although. Just want to highlight a few movers.